Hello, Warriors. Good turnaround Tuesday. How are you? Alexander, Isabor, welcome to F.A.C.E. Nice to meet you. Hi, Brock, Richard, Hugo, and Paul. Welcome back, Paul. Hello, Ryan.
Morning, Dale.
How are you, buddy?
All good, mate. You?
Pretty good. Okay, so let's talk about what might be a turnaround Tuesday candidate, and I would say crude is. Here's the way I see crude now. We had a little break yesterday, and this week I was looking for the turn, tried it yesterday, made a little bit, and then sold it a little early here last night, and we're either going to have a failing rally here, or if we make a new high, we're not going to confirm, and that's on the 4-hour, and that's on the 2-hour. So across the board, new highs, and unless it's like a $2-3 move to the upside. When I became negative the dollar, I said a big test was a 93.5 level. So far, it's bounced. I don't know if this is going to be it or not. Cable definitely outperforming. So, EG is taking another trip down, trying to make new lows here. And another explosive day in Aussie. And I don't know, it could be a little breakout here. I remember a long time ago asking Blake when we were down here, do you think we could see 75.5, 76? And gosh, here we are. And with the end just down a little bit, down 8 pips, I still don't see a top there, but the metals really exploded. And the big difference is gold is still under last week's high, and look at how silver's outperforming, way above last week's high. So gold silver ratio continues to head down. Maybe we're going back to historical norms, and if you haven't been around for a while, it's 40. I've seen this gold silver ratio for years trade like a normal range was about 40. So we'll see. Right now it looks pretty negative. We had this little rally back to, this fib level, and looks negative to me now. Euro, I was looking for about 117, just based upon, a moving average that I had up here. Yeah, here it is, 117. Not quite there, and have been saying that 1750 is kind of like my bull bear line. That's it's a missed train. I don't know how many trains I've missed. So and buses, and gosh, I've missed so much in my life. But what I've learned is there's always another one coming. There'll be another train, Ryan. I guarantee you that. So just don't cry on the platform, on the train platform, like you're saying goodbye to your girlfriend or wife as you're off to war.
It's not Ping an Uber.
It's just another one, huh? Next,
Ping an Uber.
Real important. Look, Richard's crying now. Everyone's. If Stelios is listening, I know he's shedding a tear. Are you, buddy?
I shed a tear for nothing. No, I'm kidding. I'm kidding.
He's got no tear ducts.
So, what do you guys think about, again, cable reasserting itself over euro?
Yeah, I think it's... Go on, Stel. Go on.
No, I was just going to say, we're still... I still think the move is not done yet. And I think Euro-Pound is going to the 83s. How low, I don't know. But, I've said this for weeks and months now. and I think we're going to get there. The question is what happens there. So, but I think the market being so ahead of itself, pricing now. I mean, we're pricing. Okay, we go to 25 basis points in November. That's for sure. Then another 25 by, I think by January or something like that, and then another 25 by August. I mean, we're getting to a point where it might be a little bit too soon. The problem I see is that the Bank of England and most other central banks, they're either going to do very little or they're going to do a lot. There's not going to be any middle ground, I don't think. So, the Bank of England might do one hike or two or something like that, and then things start reversing and they kind of backpedal, or they're just going to go, inflation is going to go to, I don't know, 6, 7 double digits, whatever it is, and they're just going to try and get try and catch up by tightening a lot more. I don't think the central banks are going to do that because they know that it's not really going to help the economy. Actually, no, it's not going to help the economy, but it's not going to help the issue with inflation either, really, because of the nature of inflation. So I think the most likely scenario is the Fed and the Bank of England, and maybe the ECB, maybe not, but a few central banks, they hike a little bit, they tighten a bit, and then things start to perhaps get a little bit messy in equities or risk assets in general, and then they kind of stop. But again, I don't know. The answer is I don't know. We're kind of in uncharted territory here, or relatively uncharted. We haven't seen inflation like this since the 70s, right? Or this nature of inflation. So it's difficult to say, oh yeah, this is going to happen and that's going to happen. But my view is for the pound in particular that the market's a little bit ahead of itself. That's why I want to see euro pound to in the 83s, maybe low 83s, and then I'll start taking the opposite trade.
What's really amazing is S&Ps are less than 1% away from new all-time highs here, and I don't know, that looks like a layup. New all-time highs.
Yeah, maybe. The other thing, and I was reading Ronit's comment, which is actually very important. It says an inflation scare starting as oil goes parabolic. As oil and energy goes higher and higher, this is going to really pressure the economy, the global economy. So higher oil price theoretically good for risk assets. Everything's doing well, moving and everything, and then at some point oil becomes too expensive. Things become too expensive to produce. We saw industrial production yesterday in the US, huge miss, because things are not being produced. Right, because there's shortages of semiconductors, of everything, of raw goods and of raw materials. So production drops. So as a scarcity of resources increases and as price increases as well, there's going to be a big break on the economy. I mean, that's economics 101.
Yeah, and equities keep whistling past the graveyard. Let's see if I thought we might get one more high by year end. It's only October, mid-October, so way ahead of schedule for me.
And one more thing I wanted to mention, metals are obviously flying today. Silver's up 3%. My friends some of them are long gold and silver with me, and they're saying, oh yeah, this is good, and it's going to fly. And my response still is, we're not out of the woods yet. I think there's a channel that gold is still in, and I think, hold on, let me.
I remember that, but silver sure looks like.
Silver is a little bit more in no man's land. Let me show. Hold on. Continue. There we go. So gold is in this kind of. It's probing 200-day moving at the 200 DMA. It's close. But really, this channel needs to be broken. Once that happens, I think we're going to new all-time highs. And silver is a little bit more tricky because it's not as clear yet. We bounced off this support. Sorry, let me just change this to the light color theme. That's probably better to see. The silver bounced off this big support zone. I always said, I thought it might even break below here, go to the 19s. That would have been a gift. It seems to be bouncing quite hard from there. But we have, really, silver is the range is 21.5 to 30. That's really I know it's a huge range, but that's the range. If it breaks either way, then we have to reconsider. But silver is looking healthy, but it's a lot farther away from the 200 DMA and any kind of important technical event. I think gold is a lot closer, and you know what happens when gold breaks higher, other metals follow. So it's looking good, but as I tell my friends, we're not out of the woods yet, that's for sure.
Okay, what do you think could take silver down again? The dollar turning back up? Higher yields?
I think yields are going to be the driver, and yields are going to be driven by the Fed. So if the Fed tells us that it's going to be more hawkish or tighten more than the market currently expects, and remember, we're expecting start of the taper either November or December, and the end of it by the second half of next year. So it's a pretty quick one, has to start quickly, and it's going to end quickly. So if the market gets more than that, then I think metals are going to get slammed, as they always are, and yields are going to get higher.
Stel, and good morning, guys. How are you?
Good morning.
Happy Tuesday.
Hey, welcome back, Blake.
Hey, Blake.
Hey, thanks. Thank you. Hey, Ryan. Hey, Dale and Stel. Yeah, I'm actually just trying to get my head straight but kind of coming in and just listening to what you're saying, I was looking at the precious metals, and yeah, silver's up pretty big today, and gold, actually gold hasn't even gotten to where it was at last week. And
Right.
And if you recall, last week that 1800 level really capped the gold market. So I would think that gold doesn't have a whole lot of upside here, but obviously if we clear 1800, that's a different story. You start making higher highs. But the fact of the matter is the dollar is pretty weak today, and the dollar's at some really key support. I had been expecting this. I actually got hit on a euro dollar short at 116.50 overnight, or yesterday evening. I have a friend that's in town that I haven't seen in years, and so I was with him, and we were barbecuing steaks or whatever, and I didn't even see the order get triggered.
Sorry, you were barbecuing Stacy. Who's Stacy?
Barbecuing steaks.
Oh, okay. Scared the crap out of me, man.
No, we were cooking steaks last night on the grill. I was yeah, we were doing surf and turf, man.
Nice.
Yeah,
Nice.
yeah. So yeah, because he was so disappointed. He went to some steakhouse and the steaks were horrible. So I'm like, oh well, let's do it here. Anyway, needless to say, I got hit on a euro dollar short, and I looked at where I got hit yesterday evening, and I'm like, okay, I just saw the dollar really sell off against most things. And I'll grab the screen here. Let me pull everything over here. I was just had gold on the screen. If you can see the euro, the euro, all it's doing is pressing previous support, which is current resistance. I've been waiting to short this euro up here, just enough to where you break these highs, previous highs, squeeze out a lot of shorts, and I was just saying in the chat room that here's the dollar index. What I've been expecting in the dollar index is a move back down to 93.50. This support zone is where you're going to catch a lot of people that are shorting dollars, and you catch them wrong footed down here. So what I'm hoping happens, since now that I'm long dollars again, is that we get a move back above 93.70, and then it squeezes everybody out that's short. A lot of people will chase this market lower, but if you recall my analysis, this high from over here back in March is what I'm marking up as support right now. So that's why you can see this blue zone is what I would call a really key support zone for the dollar. So that's kind of what I'm looking at here. What do you guys think about the dollar? What's happening today?
I'm not sure what's happening with the dollar today. We're seeing cable and the euro lift off, Aussie dollar lift off. I think one of the big catalysts has been China dollar yuan.
Yeah, that was a big move. That K-Man in the chat room just brought that up, and I didn't see this happen yesterday. That's a big move.
Yeah, that break below 140, 642, even 640 is a big move. That puts a lot of pressure on, because there's a lot of people who are thinking the PBSE are going to want it higher to offset some of the problems with the economy and whatever. But we've had the story that they've asked power stations to stockpile coal. You know, that's potentially a booster for the Aussie dollar, even though Aussie CNH is lower. And on top of all the rest of the commodities getting bid up as well, maybe the market's thinking that China's going to be stockpiling a whole lot more, even though they've got plenty of reserves. The central bank divergence, that's been talked about a lot as well. I'm not really feeling that today. I didn't feel it yesterday. You know, after Bailey's comments over the weekend, we saw short sterling gilts moving, but FX really wasn't interested. So I'm not buying the central bank stuff today, at least. You know, euro pound is down a bit, you know, 25, 30 pips or whatever. It's not a huge move. That's not
had a recovery yesterday, right? It's just, you know, giving back some of the recovery that we saw yesterday. It's just rejecting the previous support kind of, you know. So, you know, and one thing I want to bring up with the sterling is, you know, we are at basically the 200-day moving average, and we're at the 50% retracement of the last move lower, and we're, you know, basically at the 200-day moving average. I would think that a lot of resistance comes into play here. One of the other things that that I, you know, thought I'd talk about too, because Dale mentioned this right at the beginning. I didn't think the Aussie, Dale, was going to rip up here. I really didn't. I thought there were too many Aussie bulls out there. And, you know, but we have just completed the inverted head and shoulder pattern today, actually. And also, you know, we're also up against, you know, some horizontal resistance. I think there's possibly some upside here, you know, especially if we keep, you know, this risk appetite, you know, going. You know, we probably have some resistance between 74.80 and, you know, the 75.25, which is, you know, this spike low right over here. I think that is going to offer some sort of resistance, you know, so anywhere from where we're at. And if you want to establish like dollar longs, and let's say you think that you know, this move up in risk, you just don't believe it, and you want to be, you know, you want to be long dollars against something, you know, this is a viable option of a trade that you can take. Like, you know, I shorted the euro. Euro's not a very big, you know, big moving currency right at this moment. It's kind of slow moving. So, you know, I've kind of got a little bit bigger position than normal here, you know, as wanting to play dollar longs. But, you know, again, if you want to be a little bit more aggressive, you can play some of these crosses. And I know a lot of the guys right now are looking at, you know, the dollar Mexican peso coming right into support, the US dollar South African rand, you know, 200-day moving average, a lot of support here as well. So if you want to play some risk, quote unquote, risk off, if you think that's coming, you know, I think there's different ways to play it. By the way, I need to mention this.
I just wanted to ask you while you're on it, is when the dollar, you know, came off and began to correct from over 94.5, it was just going to be, you know, in my mind, just a pullback. And I didn't think that was the end of the dollar rally. Are you still in that camp too?
Go. Can you ask that question one more time?
You know, when we peaked last week around 94.60 and pulled back, and you know, I was just looking for a trade, not the beginning of a big bear trend yet in the dollar. I still think that we could trade 96 or so in the dollar. Are you still in that camp?
I am. I actually think that the dollar index is going to eventually break out above 94.50. That's why I'm buying it here. What my hopes are, Dale, is that, you know, this is, we've been monitoring like this range, right? This is like the upper end of the range, which is the big fib level. This is the support that I was looking for it to dip to. That's why you can see the dotted lines here. I drew that over the weekend on the week ahead video. So I was expecting a move down to 94.40, 94.50, and we basically reached for 94, I'm sorry, 94. I said 93. I meant 93. 93.50. We got to 93.50 today. It could go a little further than that, but I'm looking for it to actually create some sort of false breakdown today. We get a little risk off, the dollar starts to get bid, and I think we're eventually going to break above these highs. So, you know, as Stelios has pointed out, you know, inflation is real. You know, it's interesting. I was with a guy this weekend. He owns an insurance company that they insure trucks, you know, big semi trucks, and he is he's very he's got like a huge call center of like 300 people in South America and actually in Central America, excuse me. And, you know, he's a pretty well-to-do dude. And, you know, we were having some pretty good in-depth conversations about inflation this weekend. And, you know, everybody's worried about it. You know, it's interesting, you know, the guys and I having this conversation. But anyway, I do think it's a big deal, and it's going to be affecting, you know, the dollar. And so anyway, I believe that the dollar is going to benefit from it, as you know, we do have slower growth that kind of comes in, but still very persistently high inflation. I think that's going to favor the dollar in that environment, and that's what we're seeing right now. So, yeah, that's kind of my thoughts there.
Thank you.
Yeah, and hey, you know, I wanted to mention this since I was out of the office yesterday. If you know, if you guys knew Colin Powell, General Powell, he was old Secretary of State. I had an opportunity to meet him one time at an event. This is a picture of him and I. This is in my office. If you guys ever watch my trading or the Trader Summit videos, sometimes you could see the very bottom of this frame in my, it's sitting behind me on the wall, and that's the general. And you know, and Chad and I were just talking about, because he met him at the Atlanta Speedway. We were just talking about it in the chat room here. And if you guys don't know the ForexAnalytix chat room, this is, you know, you can see an example of, you know, I've been up for about an hour and a half, and these are all the charts that you see since I got up.
The reluctant warrior.
You know,
that he would say guilty. The general who hated war.
Yeah, I mean, he's a 4-star general, very accomplished, and he was a really, I was telling the guys in the chat room, very funny man. He acted like a general. I spent several hours with him, so I had an opportunity to talk to him quite a bit. And
Cool.
I got to tell you this. So he's looking around, and this is like 10 years ago, right? So he's looking around, and we're sitting at this table. We're in the green room getting ready to do our speeches, and he's the keynote speaker, right? And he looks around and he goes, does anybody see my iPhone? We look around, we're like, no, General, we don't see your iPhone anywhere. He's like, gosh dang it, I thought I placed it right over here. We're sitting at this big round table, right? There's about 10 of us at the table. And I look at him and I go, hey, you know, and I forget exactly what person I use. I said, sir, that's probably like a breach of national security. Don't you have like Netanyahu's number on there on like speed dial? And he looked at me and he like smiled, and then he like all of a sudden went stone faced.
Change the subject.
Like ha ha ha, very fun. Kind of wanted that. It was actually quite humorous at the time. But anyway, I just I like I said, I wasn't in the office yesterday, so I thought I'd pull that up for you guys. So hey, today I'm trying to get fresh coming back into the markets. What are we looking for moving ahead? Stelios, Ryan, what do you guys see here?
We've got just today we've got housing starts and permits coming up. We've got a good report from the National Association of Home Builders yesterday. Quite bullish report. Housing's been something that people are pointing to as potentially a worry. Is it going to start falling back? So these starts and permits will be a good look at that. See how the market's developing. Again, this is another data point that could be affected by supply shortages, because materials for building houses, if you don't have those, you can't start building. You could see starts dropping. But yeah, other than that, we've still got some inflation data the rest of the week. Markets today, we're going to see what the US is going to do when they touch down. I don't know if they're going to start picking up some dollars. Euro dollars having a little bit of a drop as we speak.
Yeah,
we have a number of Fed speakers again today, so that's
so we had them all last week too.
Yeah.
It was.
Hey, they need to trade. Okay, so
they need their position. They have to get the word out now.
They should be on this webinar. Then they'll know what to do.
Right, there we go. They've been they're out there buying dollars.
Why don't you get some Fed speakers on face? They can give us their tips.
I'll try. I'll invite Jay Paul today.
Yeah,
There you go.
He'll be
Hey,
out-
you
he'll be
had,
out of a
I'm
job.
not afraid. I invited Donald
Who-
Trump.
He'll
who's
be
the-
unemployed
who's
in February.
who's the who's the BOE guy that you always have on? Danny Blanchflower.
Oh yeah, Danny. Yeah,
Yeah,
Yeah.
that guy's a riot.
he is really.
He's
a
the biggest
character.
dove in the history of doves, basically.
Yeah.
Get
But
him
yeah.
on with Andrew Sentence. 'cause
Sentence, yeah,
they
yeah.
love having a ding dong together. Those two.
Yeah, I think
on Twitter.
Blanchflower has actually blocked a sentence now.
As
Yeah,
That's a shame.
Yeah.
All right. Well, look. I want to take a real quick look at the S&P. So the S&P is, we're above the 78% retracement. You could see we're basically at the 88% retracement, and really, stocks really do have to stop here if we're going to be if we're going to stay in more of a range environment. Like when I say range environment, let's just call it the 4,000 to 4,400 range, or 4,500 range, excuse me. We should stop here and not make new highs, because if we don't make new highs now, after this rally, you're going to get people starting to think, here we go, the lower highs and lower lows, and we can, and to be honest, as a trader, that's what I want. I would love to see us in a
Failing rally.
Yeah, just kind of a failing rally, and then just in a 4,000 to 4,500 range in the S&P. That type of two-way action will give us a lot of opportunities as traders, obviously, right? So that's what I'm hoping for.
I kind of have a thought I'd like to share with you guys, and tell me what you think. Is that, I know Biden his administration hasn't been that successful getting things passed, but most people still think higher taxes are coming. Before the midterm, he's going to try and get something through. So if normally December is where you take your losses, you harvest your losses against your gains. But do you think people with huge capital gains might be thinking about not just taking losses, but harvesting profits by the end of the year, just in case?
It could be,
You know what I mean?
Yeah, I mean, if you feel that tax rate on capital gains is going up, and you're like, I'm going to talk about this guy that I was just with this weekend. He flew a private jet up from Scottsdale to Flagstaff, where we were at. I mean, that's the kind of guy that you talk to about these types of situations, and that's what he was thinking. He's like, look, I'm sitting on a lot of gains, and I'm thinking about booking stuff here. We were actually having this conversation, and that is like, that's one of those people.
Eighth green, he took profits.
Yeah, but I mean, those are the people that make those types of references where you go, and it's a very wealthy person,
Yeah.
and anyway, so needless to say, I don't think that's an uncommon thought there, Coach.
Okay. All right.
Yeah, but and we'll see. But looking at equities again, I need to point out the IWM. We failed at this, the triangle resistance here. The Dow looks relatively good, but if rates start to go up, the Nasdaq's really underperforming here.
Yeah.
We're really not performing well. And this, if you delete all this, let me get rid of some of this stuff here. This could actually be more of a head and shoulder pattern than what we're looking at. This could end up being something that looks like this longer term, especially with rates going higher. And I don't think there's anybody that's listening in right now that doesn't believe rates are going up. I mean, the question is how far they can go up and how quickly the market, central banks can tighten. But in a higher rate environment, stocks like the Nasdaq should underperform. So, I would assume that we see some sort of resistance sometime in the very near future. So I think that's something that we should all be paying attention to, right? So, and one of the other things I need to mention here is something that and do you have a guest today, Dale?
Yeah.
Okay, you do? I didn't see
You
it.
may want to stick around. Did we cut a deal with Live Squawk?
We have Live Squawk integrated into into why? Who's up?
Because Arnold represents a company And I've seen testimonials where they say they're better than live squawk. Anyway, I'm bringing.
Oh, okay.
I'm
Well,
bringing them in.
we'll stick around. But one thing I wanted to mention, and we talked about this over the week ahead videos, all these yen pairs. You know,
Yeah.
the euro yen's about ready to complete an AB equals CD move. Pound yen is at highs, completed the AB equals CD, but 127% extension. We're there. Aussie yen, you know, Aussie yen's nearing the recent highs. New Zealand yen, inverted head and shoulder pattern as a continuation pattern, which I don't like, but we're at 127% extension right now. Canadian yen continuing to rip higher. Remember, I got caught short this thing like right here, and it wrecked me pretty good right here. So imagine, you know, here we are, you know, another 5% higher on the exchange rate. Look what's happening. I mean, 127% extension almost in play here as well. So very overbought on relative strength, but you know, they've been overbought for the last several days. Just something to obviously keep note on. So anyway, I'm going to pass it over to you, Dale, and
Right, buddy.
Stelios, and you know,
Welcome
Ryan
back
and
from the
Coach.
lifestyle of the rich and famous.
Yeah, I was just living a lifestyle, just kind of living a lifestyle in awe, kind of just
It's
hanging out.
catching after
Yeah.
Stelis' trip around Italy.
Yeah, yeah, exactly. All right, guys. Have
right.
a good one, and thanks everybody for tuning in. Thanks everybody for your support, and make sure you visit our webinar sponsors. Go visit Forest Park FX, and make sure that you can see how you get cashback rebates, or you know, ForexAnalytix potentially for free. You got 1 to 2 programs you can choose, so make sure you check them out. And all right, it's all yours.
Face is never the same without you, Blake. Just
Oh, come on now. I'm sure you guys had a great day yesterday.
No, we were all stuttering, me and Ryan, and Stelios couldn't get words out anyway. So
that's Monday for you. That's just Monday. All right. See you guys.
Thank you, Blake. All right. And thank you, Stel, Ryan. Thank you guys for everything. Okay. So, Arno, welcome to Face. I believe this is the first time that we've had a chance to meet each other. Waiting to hear your voice, buddy.
Sorry, Coach. Can you hear me now?
Got you, Arno.
Thank you.
Thank you for joining us. Nice to meet you.
Thanks for having me. Really, really appreciate it. It's an honor being part of the webinar today.
Okay. Are you going to be showing anything? Because there's a share screen button if you are.
Yeah, sure. Let me quickly just open up a couple of these things we've been looking at.
I've been to your website. Nice. Took a look
at
it.
Coach.
There, you guys have some nice research, some great articles on there, and I'm assuming you're an author of some of those articles. Is that what you do at Financial Source?
Absolutely, Coach. I'm one of the senior analysts at Financial Source. So our main focus point, our main focus is what we try to do is basically, like you've seen with the testimonials about the squawk. We basically have a plugin for a squawk as well as a news feed, but the main value is really the intraday, intra-week analysis. So we've got daily video commentary going around, daily reports, weekly reports, daily webinars, etc. So that's mainly the main add-on, the value add-on, if you will.
Okay. Do you have many people in the US using your product, or Europe?
I think so, Coach. I think the majority of them is actually US based. The company we're actually hosting from the UK. I'm in South Africa, but the majority of the team is in the UK. But I think majority of the base is in the US. Okay,
so why don't you tell us a little bit about from point A to point B, how you got started in the industry, what you were doing prior, and what led you to where you are today.
Thanks, Coach. Yeah, I think like most retail traders, I think I started for the wrong reasons at first. So I got pulled into a trading seminar probably about 10 years ago. And it was a group of really good marketers that promised me the world, that I would be sitting on a beach somewhere in no time, just pressing 1 or 2 buttons and making millions.
So they didn't tell you you'd be sitting on the beach and you're going to have to sleep there too and get a tent, huh?
They didn't, Coach. They didn't. They left that part out. So that was a really interesting start. So after those dreams, came tumbling down very quickly. The one thing that stuck around was just a very strong curiosity about the financial markets, and that really started me on a journey of learning as much as I can from as many people and courses as I can. And I probably spent the first 6 or 7 years just focused on the technical side of trading. Really enjoyed that. I always wanted to know why, though. Being very curious and analytical, the why always bothered me. So, seeing something rally for no reason, I wanted to know why the currency was doing that. Why did the market react that way after a hike or a cut in the interest rate, or no hike or cut at all? And I wanted to know the why around why the markets was moving.
Did you have any mentors or books or anything that were, kind of not just inspirational, but kind of gave you an epiphany that influenced the way that you're still trading? Any person or method?
Absolutely. I mean, the amount of technical courses that I went through is probably ridiculous. Just endless amounts of technicals. And what actually happened in 2018, apart from the technical side, to try and trigger more of the why, if you will, in the markets, I took part in a 6-month in-house global macro fundamentals course. And suddenly when I started learning about the fundamental side, I just fell in love with it, fell in love with the markets, all over again. Suddenly I felt like I understood and had the skills to understand the why, that thing that's been bugging me the whole time. So I can see the pound is rallying, but why is it rallying? I wanted to know the reasons behind it. And I felt that that curiosity just led me to more of a global macro framework. And
okay, let me ask you this, since you did go that way, and I could use a course like that. Guys like Mark Chandler and other, real good Adam Button, they always tell me the why, when I'm just, to me, it's a, RSI 3 drive, all technical. And a lot of my biases are based upon technical. So now that you are familiar with fundamentals, so you get most of your narratives and biases from that, and then wait for technicals to confirm it.
I would say that sums it up perfectly, Coach. I think you can put it down to an 80-20 rule. So I would place 80% of the focus on the narrative or the theme or the macro drivers, and then I would still use the same technical skills, but more from a timing point of view, more from a risk management point of view, if you will. Basically, choosing entry and exit locations based on the technicals, but mainly trading in line with a fundamental rationale.
Okay.
And I mean, sometimes the fundamental rationale can be as simple as, just positioning being stretched. There's so many different aspects. It's not always just driven by news events or macro or monetary policy or anything like that. Sometimes it can be as simple as, hey, we like this thing going up in the medium term, but short term there could be some opportunities to play some mean reversion, etc.
Okay. And what are the fundamentals telling you about the dollar in here? We've had this bounce. The whole market was wrong-footed at the beginning of the year. The whole world was bearish the dollar. And now we kind of have the opposite setup. We've recently pulled back to a pretty important zone that I have here around 93.5 is kind of like a breakout level. So fundamentally, you would think that most people are bearish the dollar because of all the monetary stimulus, but now we're heading towards taper. Does that make you more constructive on the dollar?
Definitely. I think coming into the year, we had that first massive rally back in February. And I think that was mainly driven by just major offside positioning that we had in the dollar at that time, when we were sitting on such a stretched positioning. So I think that was a bit of a relief rally, if you will, in the dollar. And then, if you recall, from April, we had a lot of that reflation narrative coming back into focus for the markets. And from a global surprise, economic surprise point of view, that saw a lot of downside being priced back into the dollar. Where we turned a little bit more constructive on it was back in early June, before we went through that FOMC meeting back in June. The reason why we turned a little bit more constructive, not necessarily bullish on it, but just not wanting to be shorted anymore, was based on the potential change from the Fed. Eventually, they were going to have to move, acknowledge what's going on from an economic point of view, moving towards tapering. And also for a similar, if we take a look at global surprises, it started to surprise to the downside back in May already. So we started to see, if we take a look at the global SETI Economic Surprise Index, that started to top out around that time. And because the dollar is so closely, correlated to the global picture, the global economy, when that started to roll over, that got us a little bit concerned about wanting to be short the dollar. And then obviously we had the FOMC meeting coming up in June. I think that rattled the cages. I think a lot of the upside that we had initially again was positioning, because we were sitting on, back in May, June, early June, again, we were sitting on huge amounts of net short position being built back into the dollar. So I think after that was flushed out, it's been really driven by Fed expectations. And I'm definitely more constructive on it in the medium term. In the short term, though, I think what's interesting about the dollar is that at the September meeting, the Fed has taken a lot of the sting out of the incoming economic data points. If you take a look at how the dollar reacted after CPI last week, I think that was a good example of them taking the sting out, because now, if we get good data between now and November, it's not going to change the way the markets think about Fed tapering, as well as that mid-2022 conclusion. It's basically not going to change how they think about that. But if we see the data coming in with a miss, or just as expected, with them taking the sting out, already telling the markets what they're going to do, I think the dollar is going to be a lot more sensitive to risk sentiment in the next couple of weeks. And now that we started to see global case numbers also topping out and pushing lower again, there might be some scope for some reflationary data points coming out. Obviously, there's a lot of concerns about...
Is that going to be bullish or bearish the dollar?
I think that's going to be very short term, the dollar, coach, at least running into November. So running into November, I think if risk sentiment can keep up, if equities can keep up the pace we've seen recently, if we get data points that points to more of a reflationary setup, even though it's probably only going to be short term, I think that can add downside for the US dollar, very short term, just purely based on reflation. But again, with the Fed taking the sting out of the data points, it's going to be really driven by risk sentiment. I think the move we've had over the last couple of hours, I think it's mostly been driven by risk. Equities have been pushing to the upside. We've seen very constructive moves in the high betas and downside in the safe havens. So I think it's going to be more sensitive to risk sentiment. If the Fed didn't come out at that September meeting and acknowledge tapering, as well as already acknowledge a mid-2022 conclusion, I think the data would have mattered a lot more. I think we would have seen the dollar rally on positive data points if it wasn't for that, because the markets would have used that to basically gauge what the Fed is going to do next. And I think now that we know what they're going to do next, it's basically like, it's just taking the sting out of it going into that November meeting.
Okay. Any view on what's been happening with, you're from South Africa, you have a feel on what's happening with the miners, which have not really kept up with the bullion. I was always taught that the miners should lead. You have a view on gold and silver having very strong days today?
Yeah, I mean, silver has been such a dog to trade recently. I was actually long silver a while ago from around that 23.40 level. Obviously, that drop in September, I mean, I should actually start a signal service where I sell where I place my stops, because that's often where the market turns around from. So,
Okay,
so
on
I
that
literally
flash
had my
crash
stop
day.
sitting on 2156. We touched that level, bounced back. So I got back in from 2215. So happy to finally see silver breaking out of that trend resistance that we've been slamming up against recently. I think the biggest just risk for silver from here, like gold as well, I think it's going to be yields. The reason why I wanted to actually add to silver to that position we've got running, but the thing that just kept me back was the massive monster moves we've seen in yields recently. Personally, I do think it's looking like this is running out of a little bit of steam, at least in the short term, and that could provide further upside for something like the precious metals. But in terms of yields, I think it's going to come down not only just to the inflation outlook. I think there's been a lot of focus on the inflation side, and that's really driven the narrative around yields recently. I think the one thing that's obviously been talking about quite a lot is the stagflation risks in the markets. And even though I'm not really in the stagflation camp right now, I think if we do start to see a faster deceleration in growth data coming up in the next couple of weeks and months, if we do see more of a growth concern developing, even if inflation picks up, I think there could be some downside for yields coming up on that front. And I know that's counterintuitive, because normally the bond market's going to be more sensitive to rising inflation and obviously rising interest rate expectations based on that. But if the demand picture completely drops out, if we see demand and growth really taking a big hit, I think counterintuitively that can actually start to lead to downside in yields, upside in bonds. Because if we take a look at the short end and the back end, the short end is normally driven more by policy expectations, while the back end of the curve is normally more driven by your firstly inflation, and then secondly growth expectations. So I think the one risk to our medium term like upside bias for yields is that if growth really does decelerate, like some and analysts that are expecting it to, I think that can counterintuitively, even if inflation stays high, could lead to some downside in yields in the weeks ahead. And I think that should be more of a positive backdrop for precious metals. I think the reason why I like silver more than gold is more from a medium to long term outlook. So I think the fact that there's so much more industrial applications for silver makes it more attractive from a supply demand point of view. And with all of the focus in the next decade and possibly more, that's going to be turning its attention to the green initiatives, to the to a greener economy, I think there's a lot more applicable uses for silver with solar power, etc. And that should, again, from a supply demand point of view, mean that it's going to be less sensitive compared to something like gold to the yield environment. And I do like that. But I have to say, I am a little bit, concerned about the yield outlook. I think we're running into areas for yields where we could start to see some downside playing out, i.e. upside for bonds. But if that doesn't happen, and yields just make a run for it, I think consensus right now sees it going up to, I think, what's it, 2% for 10-year?
Yeah, that's a lot of people have 2 to 210 as a peak, and then after that they're going to sink, and maybe we go to negative rates again. So I've heard that scenario.
I'm not sure whether I'm in that camp right now. I know they say they think 2, but I think we top out before we get there.
There's another area at 168. And at 168, you would have a 3 drive. Are you familiar with that formation?
I am.
3 drives to a top, 3 drives to a bottom. So one more push up towards 168 would kind of would give you, would give you like a 3 drive formation to that it may be peaking out there.
And we're also running into some firm resistance around that level as well. Going back to that range high we were stuck in for a couple of months back in April and May. So I'm just not sure whether we get to 2%. I think if we top out soon, I think that can be even more positive for precious metals. It's a little bit counterintuitive though, because normally precious metals would be more sensitive to tapering expectations, but it's just there's so many things that's not like a normal cycle right now. I'm very weary of pulling too much similarities from previous cycles to this one, just because there's so much that's different this time around.
Okay, crude looks like you're getting, you know, a potential failing rally here in crude. I was looking for a high this week. Actually think that, well, then I turn it into my interview. I'm negative here. Do you think that we're getting some type of top, and it was led by this crash, pretty good crash in natural gas over the last couple days?
Yeah, and I mean, natural gas, that was the main instigator of the whole gas to oil narrative a week or so ago. And I think if we can see more downside for natural gas, I wouldn't be surprised to see more downside playing out for oil as well. I know there's a lot of talk right now about, you know, $100 a barrel. I just
too much talk.
Exactly that, Coach. I think the markets have gotten a little bit ahead of themselves. That's the other one. I'm you know, apart from oil, the other thing where I think markets have gotten way too ahead of themselves is with sterling right now. Sterling it's been a frustrating one for me over the past couple of sessions, because it's a market that I've been bullish from the start of the year on sterling, from that very first pushback we had from Governor Bailey back in January. You know, we were long sterling versus a basket, and it's been a great trade. But the way that money markets have priced in, have gotten ahead of themselves with sterling right now, that's got me a little bit worried for the short-term picture for sterling. If we take a look at this screen, this is basically just the SONIA futures. Now, SONIA futures on the December contract for this year is pricing in 44 basis points of tightening. So if we get, right now there's expectations of getting a 15 basis point hike either November or December, whichever one of those two we'll get. But if we take a look at the December contract for next year, sitting at 98.81, that implies a cash rate of 1.2% by the end of next year. So if we account for the current cash rate of 0.1%, if we account for the 15 basis point hike that we are probably going to get in December, that means that the markets right now is expecting the bank to hike 4 times next year, each one of them being 25 basis points. I just don't see that happening right now. I mean, even though I'm more structurally and medium term, I'm bullish sterling, I do see there's risks. If money market starts to unwind some of this overly aggressive bets, I think that can see lead to some decent repricing in sterling as well. It's obviously been supported by yields pushing up. It's been supported by SONIA futures pushing lower. So implying higher rates. But I think the reasons why higher rates are being implied, it's not because the economy is doing so well that the markets think the BOE is going to hike right now, right? It's all about fears of inflation. And even though Bailey and Saunders, as well as Pill, has come out saying that, you know, as alluded to more of a hawkish tilt, we had Mann coming out last week, we had Tenrero coming out, and they don't seem like they're on the same page right now when it comes to these aggressive expectations. So I don't think there's a broad acceptance among the MPC for where they're going to take rates, and I think that is a risk to money markets. The other thing is that the type of and Bailey has said this himself, the type of inflation that they're trying to fight, it's supply driven, it's energy driven. You can't hike away supply chain disruptions. You can't hike away energy prices that's high. I mean, that's more to the fiscal side that you can try to solve those types of things. So I just think now
you can't print natural gas or oil or corn.
Exactly. I mean, you can't hike to get more HGV drivers. You can't hike to get more truck drivers in. So I just think if they do, I think right now the bar is set so high for sterling that even if they do follow through with a 15 basis point hike, I think that is so far priced right now. If they don't come in aggressively or overly hawkish, that runs the risk of repricing and sterling coming under pressure. And obviously, if they don't, which I don't right now, I can't see them hiking 5 times before the end of next year. If they don't follow through, there's going to be repricing. So I would expect sterling to dip once these money market starts to reprice. But because the medium term outlook is still positive, I would look to buy any of those dips if indeed we get it. I was already wrong-footed on this with euro sterling last week, so I was looking for a little bit of upside as money markets realized that, hey, we've gone a little bit too far, but I got taken out of a buy that I got, which I entered from just above that 84.70. I had a stop sitting just below that recent swing, below 85.50. So I've got taken out at 84.40. I got into this again because I don't see the markets realizing, the BOE at least realizing what money markets is pricing right now. And the reason why I like
might
Euro,
be turning right here.
I wouldn't mind if it does. I wouldn't mind if it does, but we'll see how it plays out. I mean,
Okay.
the thing is, timing with this, I think, is the biggest risk because we're still a while away from the November meeting as well as the December meeting, and we've got CPI coming up tomorrow. If CPI beats, I would probably look to fade sterling strength on a CPI beat because I think that's just going to create further aggressive pricing. And eventually, I'm hoping eventually money markets will realize, listen, we've gotten way too ahead of ourselves. We need to reprice. And I think that's going to put sterling under pressure. The other risk to consider, though, and I think that's largely been driving euro sterling as well, not only that, but the euro has been exhibiting a lot of funding currency characteristics over the past couple of months. And sterling, even though it's not a high beta currency, it does have a higher beta compared to the average. I think risk on has also been a negative driver for something like euro sterling. It's been a real hard pill for me to swallow to go long euro sterling because we were short this from January. So
yeah,
making the shift from bearish to bullish has been psychologically hard.
It usually takes longer than we think it does to turn around a battleship.
That's exactly that, Coach. I think these levels offer attractive risk reward. Also, because the euro, I think there's so much negativity that's been priced in for the euro. If we take a look at leverage funds is sitting on a sizable net short right now. So I think if we are able to peak above some of these key levels to the upside, that could spark a little bit of a short squeeze. And euro sterling is, it's been whenever we've had short squeezes, they've been violent in the pair. So
yes.
I'm potentially looking at something like that, but it's not just euro sterling. I think sterling in general, I do think the risks are tilted to the downside just because money markets are just too aggressive.
Okay.
Similar to.
So what's the best way for people to follow you? I know your Twitter handle is Arno Venter 1. Is that what you have, or a 9?
I think it's
Twitter?
9. The first 8 was taken, Coach, weirdly enough.
Okay. All right.
So I went with 9. The first 8 was taken, so it's Arno Venter 9. But they can also reach us. Financialsource.co is the website. I think we've got on most of the socials. We've got a handle.
Want to show
on
your
Twitter.
website?
Yeah, sure. Let me quickly.
Before you go. Sure.
Quickly grab that on the screen. Can you see that one, Coach?
Yeah, came up.
So that's the website, and I mean Financial Source. If you search that on Facebook, if you search it on Twitter or YouTube, etc., you'll be able to catch us there. And my own handle, of course, is just Arno Venter 9 on Twitter.
Okay, I'm glad I reached out to you, Arno. It was a great interview. Appreciate you sharing your views with us today, and wanted people to take a look at your service and what you offer, and maybe you get some business out of this. And when you survive an interview with me, you're now my trading warrior brother. That's
fantastic. Thank you, Coach. Really appreciate that.
Yeah, Arno, you have a great you have a happy demeanor for being a trader. So you had an interesting story and some interesting views. I didn't even know about Sonia or whatever that was before. So I learned from you today, and thank you so much for being with us and edifying our community.
It was really just an honor for me to be here, Coach. Really appreciate the time and really appreciate the invite as well.
Okay, you're getting some thank yous from Jachin, Alexander, Monica. So have a great fall trading season, Arno. We'll do it again.
Thank you, Coach. You too. Appreciate it.
All right, everyone. That's a wrap for Turnaround Tuesday. Good hunting. You could join the team in 15 minutes for the morning edge, and I'll see everyone tomorrow. Don't just count your pips, count your blessings. Adios.